Hello, everyone, and welcome to my new podcast, which we had a couple of episodes last year, but I'm going to make a serious effort of making it consistent. It's a market on traditional markets that I'm going to be referring to as Market Pulse. Unfortunately, the domain is taken, but we'll see how it goes. Where I'm going to focus on traditional markets. I'm going to try and pretend that Bitcoin doesn't exist. But since it is the beginning of the year, I'll throw a little bit of bone to you guys on the 1 hour Bitcoin chart as I kick this off. The podcast is going to focus on both technicals and some fundamentals, and we will be taking it from there. I got about 200 live viewers. I am expecting the show to be a lot less popular than the Bitcoin show, but I will be focusing on the numerical indicator. In fact, I'm gonna add another version of the numerical indicator to fully match Wall Street's because because my version is slightly edited. And if I'm going to be looking at traditional markets, it really should be 100% in line. I've been working with my developer the last couple of days. We're adding new features to everything. So probably in about a month, there's going to be releases of all new code. But without further ado, let's just jump right into this. Let's go screen share. As you can see, I'm still at the same coffee shop I've been at since like 10 o'clock this morning. And this is what I'm doing instead of, watching. You know what? Let me close some windows before I dox myself again and have to make the video public. Let's close some of this stuff. All right, let's make sure I can't dox myself. Let's give it a minute here. All right, should be good now. All right, let's share screen. All right, here we go. As always, please read the Learn Trading section of my website, Liberty Life Trail. You will find it under the Educational Tools Learn Trading. If you are interested in having access to the numerical indicator that I use for most of my trading, please check out the consulting section. And if you are interested in joining one of my seminars, most of my seminars do provide you access with that indicator for life or until something goes horribly wrong. And my Singapore seminar is pretty much sold out. I may be able to sneak in one more person. So please reach out if you are interested. And the LA seminar is actually filling up. So if you're interested. And then there's DC and New York. I haven't really focused on those yet. All right, so a little bone to you Bitcoin traders. There we go. The hourly chart gave us a 9 buy. It was a pretty good 9 buy. In one of my group chats, I threw in the link. Once this 8 candle was in, the 9 candle was pretty obvious. So what happens now on the hourly chart? We have a 1 and 2. So we're looking at least a 1 to 4 candle correction. At the least, what you want to do is you want to look for a short bounce, maybe into this moving average, and then reevaluate. Are we going to go down and be in line with the 4-hour chart? Are we going to be in line with the 4-hour chart, giving us a 9 near the moving average for a nice buy point in line with the prior high and then go up? Or are we going to reverse from here? And the answer is, of course, nobody knows. So let's take a look and see. For now, those that caught the 9 on the hourly chart are probably in a slight scalp. I would be very careful here. I am leaning towards a little more downside on the hourly chart in order to get a 9 on that 4-hour and try to bounce off of that. All right, I'm closing this. This is what this podcast is going to be about. It's going to be about traditional markets. I have the S&P 500. But before we get to the technicals, let's look at some fundamentals on the S&P 500. Let's start with this. So we're about to break a record. We're about to break a record this century. Okay, well, go even longer than a century. Okay, so as Goldman Sachs has reported, the S&P has gone 328 days without a 5% pullback. Okay, That is over 1 year since 5% pullback. That was probably around the time of Trump's election. I have videos from the time of Trump's election, and I was very, very clear that Trump being elected will be one of the greatest things for the stock market the world has ever seen. I've been saying this at the, I'm not going to the Anarchapulco conference. I think that conference has gone way too scammy for my taste, and these people don't listen. I've been speaking at that conference since 2015. I kept telling them, sell your gold, buy stocks, sell your gold, buy stocks. And all they've been doing is laughing at me for 4 years. And I don't know what the hell they're doing, but the stock market continues to go up. We're about to break a record. All we need a little more weeks, and we're going to have an all-time high in the number of consecutive days without a 5% pullback. That is really unprecedented. All right. So that's something to keep in mind. All right. Next, sticking to the fundamental side. This is also a really, really good one. Okay. So here's the performance of the S&P 500 after a year where the S&P 500 makes 20%. And anytime the S&P 500 makes more than 20% on 2 consecutive years, you see it in gray. Okay, so you can see that, right here, right there, and right there. And look at the 90s. Look at 95 to 99. I mean, that's just insane. All right, the market was making over 20% every year, and we might be on pace for another one of these periods. Like 2013 was a really good year. We made 32%, and then we followed that with 13%. So in 2017, we made 22%. I'm actually a little surprised because that 2016 is not here. 2016 was a pretty damn good year for the stock market. In fact, when I did my presentation at Anarchapulco last year in February, I looked at the amount of the annual percent return for the S&P 500, but I didn't use January 1st to December 31st. I used the day of 2016 in Acapulco versus the day of 2017 in Acapulco. So I went mid-February to mid-February, and that was like a 26% return. So to me, 2016 also made 20%. I need to double check, but it was probably like 19%. It must have just missed it, because if you use February to February like I did, it was over 22%, and I remember that very, very clearly. So 2016 was a great year. 2017 was a great year. I think 2018 is going to be a great year, and you're about to see how it started off. And the year following, a 20% return has historically slightly underperformed the average. But the average has still been pretty positive. You can see it right here. Let me make this blue. You can see it right here, right? So the year following, the average has been 10%, okay? So that's pretty good. All right, so again, something to keep in mind on the fundamental side. All right, do I have anything else fundamental on the S&P 500? That's oil, that's commodities, IPOs. Yeah, let's talk about IPOs. There's been a lot less IPOs in recent years than the historical average. I mean, obviously, look at, maybe they've been replaced by ICOs, but I highly, highly doubt it. Okay, look at the .com situation. Let me get one of these. Where there were like hundreds and hundreds of IPOs, right? So this has dramatically slowed down. Obviously, this was the recession, so you had pretty bad years. This was also the recession, right? This was the .com bubble. But we just had 2016 was a pretty bad year, considering there was no recession. Now, we picked up in 2017. Let's see if we can pick up again in 2018 with IPOs. So there you go. So you can take a look at the numbers there on IPOs. So just wanted to show you guys this as well. All right, here's the S&P 500 monthly chart, and it's just on a freaking tear. I mean, we just have one of the best months. I mean, back when I drew these Fibonacci extensions, I mean, who would have thought that we would like get there so freaking quickly? I mean, the monthly chart of the S&P 500 is just amazing. And you know what? I don't even think we're overbought. This has been one of the, oh, you know what? I was going to show that to you. Hold on a second. I have other, well, wait, I missed a couple of things here. Hold on. I have other historical charts. Hold on. This one's perfect. All right. Hold on. Let me, forgot about this. See, I compile these things during the week, and then the problem is, you know, setting up a podcast and doing everything. Let me make it wrap like a circle or something. All right. This is really, really good. Really good. The current bull market perspective, okay? So the current bull market perspective, and we're cherry picking a low here, right? We're cherry picking the March 9th, 2009 low. Wait, let me make this smaller. There we go. All right, and that's in red, right? So I don't know why I circled that in blue. Hold on, let's get red. So here's in red, right? So now we're talking this guy here, right? The red. And here we are, right here, okay, on the red. And it's not as steep as the bull run of, you know, the 1920s, the roaring 20s, right? From 1921 to 1929, this 8-year period right here was even steeper, okay? This is the red is the current run. The 1990s, the tech bubble was a bigger run, and the 40s to the 1949 to 1961 was a longer run. So we're working on the fourth right now, the fourth best bullish run in stock market history, and I think we're nowhere near a top. I don't think we're gonna. I don't think we're near a top yet. Okay, I'm not gonna read all this, but you can go ahead and pause the video later. I don't know what minute mark I'm in, but go ahead and give this a read. It's a really good overview on some of this stuff. All right, let me close this. So let's glance at a long-term historical perspective. I forgot about this chart. At last year's in Acapulco, they never published it. They never did the video. Maybe I will start my own presentation series on YouTube, and I'll get it done. Oh, wow. What happened to my... There's something wrong here. I think TradingView is messing up a little bit. So it looks like TradingView has taken away my data. TradingView has taken away my historical data, and that's really, really unfortunate. That really, really sucks. Maybe I have a picture. Hold on. That does suck, doesn't it? Give me a second here. Oh, wow. Here it is. So my TradingView used to look like this, and it used to just pull all this up. But for some reason, TradingView has dropped the data set, which, like I said, is kind of shitty. So this was snapped, you know, months ago. So we're obviously much higher now. But this is why I do not foresee any, you know, equity top in the near future, because we've just broken out of a 15-year consolidation, and the prior two times we've broken out of a 15-year consolidation, the S&P 500 and the Dow Jones literally went 10x. They went 10x from 1950 all the way into 1965 or something. Then they went 10x again from 1982 into 2000. So we could be on another 15-year bullish run where the S&P 500 goes 10x from the moment it broke out from you know, in 2015 or 2014, whenever we broke out about 1500. So S&P going 10x from 1500, that's like 15,000 on the S&P, right? So we're talking like almost 100,000 on the Dow. I mean, these are big metrics, guys. Really, really big metrics. So let's see what happens. Let's see what happens. And this is why gold is a terrible investment for the long term, because it doesn't account for the advancement in technology, and we're just on a roll with technology. All right. So I'll see if I can get the back-end data to the Dow Jones, and maybe I'll do this equity presentation on YouTube or something. All right, let me close this. Or maybe I just have to find another ticker. The problem is, if I find another ticker, I lose all of this. I mean, this chart took like God knows how many hours to put together. And I can't just like change the underlying ticker. And if I change the underlying ticker, I would literally have to redo this whole chart. And this chart took like a week to put together. It's just a huge effort that I no longer have time for. And it's really, really unfortunate. It really, really sucks that it took away my data. I don't really know what to do about this, but it is what it is. All right, let me close this. All right, so here's the monthly chart. I'm just going to zoom in on this monthly chart. It's based off the weekly chart pretty much. So, but we're at brand new all-time highs. Again, MACD going up, RSI going up. All we can do is use the numerical indicators. Oh, and upgraded indicators are coming out. I'm working with my developer now. We're adding a couple of new features. I'm also going to add an additional one that matches Wall Street exactly, because Wall Street has a bit of a problem right now with their indicator that I don't. Their problem is that they don't have a single one of these numbers. The reason is because a prerequisite. I mean, these numbers, the green 1 to 9 is known as the setup. And a prerequisite for a setup is a price flip. Here's what a price flip looks like when numbers go from green to red and then back to green. So because we never flipped to a red number anywhere here, Wall Street does not have a single number of a setup. They're all missing, okay? And I think that that's unnecessary. But as I showed in the Bitcoin video the other day, sometimes it's not what it should be. Sometimes it's what everyone's following. And that's what I showed you on the Bitcoin chart, where there was incorrect Bitcoin prices, but the indicator gave you a nice sell signal off of an incorrect index. And it kind of timed it well. So what do you do? But anyway, let's. We're bullish. We're bullish. We're going to continue being bullish. The way my indicator works is very, very simple. You can take your profit on the 9. You get back in on a 2 trading above a 1. Boom, you're back in. You can take your profit on the 9. You can get back in on a 2 trading above a 1. You're done. You're currently in this market on a weekly scale. I can like add an additional Fibonacci line. Jesus Christ. Like, I guess that's our next target. Up there at just under 3,000. I mean, it's absolutely insane. But that's the monthly chart. We're not focusing on a monthly chart. That's way too long scale. What we want to focus on is the weekly chart. I drew I don't even know the last time I did this video. I can only guess the last time I did this video was the last time I drew one of these arrows. So here's the arrow. So the last time I done this video would have been right here. Looks like 11/27, okay? And look at last week. I mean, the first week of the year was just ridiculous. And January, like after a good year, January has not always been very, very good. But it's just on a roll. Like, I don't even know what to say here. I drew these arrows pretty damn optimistically, and we're above my arrows. I mean, what else can I say? Let's go back to the indicator, right? I mean, we have no other metric. We're dealing with all-time highs. I mean, I don't know what anyone else is looking at, but this is the only thing I look at. Let's get these things out. Back test and regular. I don't really need to see the back test. Okay, so let's see what it's telling us on the weekly. Oh, wow, look at this. This week we had a 9 sell, but again, My indicator is different than Wall Street's. Wall Street did not get this 9. They didn't get anything because they never got the price flip. They didn't get the price flip, okay? Now, they did get the 913 sell. I think they did. Let me see. Let me see. Yeah, Wall Street got this 9, right? The reason I know they got this 9 is because there was a price flip before the 9, all right? I really hope this music doesn't flag this video for copyright. But anyway, I'm still at the coffee shop, guys. Wall Street definitely got this 9. And there was I was looking for a bigger sell-off, but it never came. There was a 913 on the same day, and now we're kicked off another countdown from this 9. Wall Street never gets this 9 because there was never another price flip. And now we're going up. What can I say? Let's close out the back test. Now, this 9, you can, if I was going to take a profit on this 9, I would have literally taken it Friday afternoon because there's nothing here that scares me. I like having my 9s with reversal candles, okay? And there's no intersection. So the chances of this 9 being a reversal is small because there's no intersection. Again, Google it if you're curious. All right, let's move on. Let's save this. Let's close that. Let's go to the daily. The daily is interesting. The S&P daily. The S&P daily is on a 13. Again, there's no reversal candle here, but between the daily 13 and the weekly 9, I would have been cautious with the S&P 500 and taken my profit Friday afternoon before the markets closed for the weekend. Let's take a look how my version of the indicator fares with Wall Street, where they're in line, right? Because there was a price flip here and even here on this bad day. Now, if you take this bad day with a grain of salt, you have 1, 2, 3, 4, 5, 6, 7, right? So we're actually near a 9, but traditionally this is a price flip on one bad day, and we still have more upside. But be careful with this 13. Wall Street loves the 13s way more than I do in Bitcoin, okay? This 9 here gave you a nice little sell-off. Then higher, this 9 came with a 13 that just finished, okay? Just keep that in mind. Let's turn off the back test. It's cluttering us. This 9 gave you a nice little pullback and higher. This 13 gave you a nice little pullback. This 13 didn't do much. This 9 gave you a pullback. So the indicator is pretty damn useful, okay? Again, we're dealing with all-time highs. I don't know what other indicator I can look at, okay? Be careful here, but it looks like we're going higher, and be careful with the weekly that I already showed you. All right, let's save this. Let's close that. All right, gold. I have updated my gold ticker to use the futures gold. So that means all the annotations, all the drawings have disappeared, which is unfortunate. Well, not on the monthly, sorry. They've disappeared on the weekly and the daily. The monthly, I've been using the futures ticker, so some annotations are there. So let's take a look at the monthly gold. This is a historical look. Again, I'm starting to use the time indicators more and more, only because I consider it so freaking good. And it's really not my problem that other traders don't use them. They've never heard of them. That's what I like, and that's what I use. You can build your own. The code is, the map is public. My website has the freaking map on it. You can use other people's, or you can, contribute to the Tone Base Fund for access. Look, here's the futures of gold. Beautiful 9 right here on the monthly, marking the top. Okay, I don't know how clearer this could be. There was another 9 here that gave you a short pullback. And then this 9 marked the top. I have my Fibonacci set up, and look at the monthly Fibonacci. Look how nicely it took you into the 38% upswing, and we've been lower ever since. We do have this little trend line, and we're still sticking under the trend line. This 9 in connection with the Fibonacci gave you a nice sell. This 9 in connection. This 9 was actually a buy 9, but it kicked off a 13 count, and the 13 count almost happened. This monthly 13 was there in the beginning of the month. It didn't close it, and once you got a 9 to the upside, this 13 got canceled out. So savvy traders on the monthly saw the 13 and could have jumped the gun. Guys, Wall Street cares about this. It's not a joke, all right? They really, really do. That's why I'm focusing even more on it and trying to educate you all. The monthly right now, this 9 did kick off at 13, and we're now on a 6 monthly. We're now above the 50-month moving average, but we're under the trend line. So, you know, this thing is going to give one way or another, okay? All right, enough of the look on gold monthly. Let's close that. I'm curious what gold yearly looks like, actually. Let's take a look. I haven't looked at gold yearly in forever, or possibly ever. Here's the gold yearly. Let's see what it looks like. Wait, is this 12-month? No, it's 12-hour. That's not what I wanted to look at. 12-month is what I want. All right, here's gold on a yearly chart. And, you know, not much. There was a 9 on the yearly. It overshot. Gave you a high the following year, and it was down from there. Really flipped. So there's really no entry on gold yearly futures. Good. What chart was this initially? This was a monthly chart, right? Yeah. Let's go back to the monthly. This is how I'm going to save it. All right, let's save this. We can close this. I'm up to 430 viewers. I'm happy with my numbers, guys. I'm happy with my numbers for a traditional market video. All right, here's the monthly chart. Just out of curiosity, I'm gonna the weekly chart. Out of curiosity, now that I flipped my ticker to weekly, I want to see if there was any assistance on the all-time high using the weekly chart. And I mean, I'm not surprised, but many people that hate this indicator will be. There was a 9 right here, the week of the all-time high close. That's with an intersection. I mean, that's absolutely amazing. I mean, and this indicator continues to fascinate me. I mean, no help. I'm not even using the back test. I'm just looking at where the 9s showed up. Not much help here, but this 9 was useful. It marked at this top. Not kind of cherry picking, and a nice 13 here. Nice 9 there. And let's see what we're looking at right now. Another nice 9 here. Doesn't always work, but when you see the 9s, you know, it helps you. You don't have to always be in a trade. Short term, then went higher. Again, a 9 at a moving average. You got to look at other stuff alongside. And currently, we had a 9 weekly here telling us to be careful and go short. And now we're flipping over. So technically speaking, according to the weekly chart, gold just went bullish last week here. Where's your stop loss? Well, your initial stop loss is at the swing low. At this point, I would have no problem setting my stop loss below the entry candle or below the candle before the entry candle. If you get a new high next week, I would raise that stop loss to break even or below the entry candle. Okay, that's all I really have to say. I don't really see much else here. The golden cross is looking good. That's bullish, but lower high, you need a higher high. Until you can get a higher high, you got to be careful. So this is the weekly, and you know, I can probably draw like a symmetric triangle, but we've already broken out of it. So It's leaning bullish. Your RSI is going back up. Your MACD is crossing. Gold is slightly bullish, but not by much. All right, let's save that. Let's close that. Let's look at the daily gold. The daily gold, I mean, gave you a beautiful 913.9 right here. So my best guess is this 13 is coming from this 9, and this 13 is coming from this 9, and now we have this 9, and we've already reversed going up. So once again, Wall Street does not have these setup numbers because there was never a price flip. So they got this 9, and now they're shooting blanks over here. All right, but I am still looking at my version, and I might get a 9. Now this 9 kicks off a 13, so you can hang in here into a 13. Again, if you took your profit off, if you entered off of this 9 to the bull side on gold, you exited with your profit off of this 9. When do you go back into the bullish trade? Well, to me, you go back in the moment the 2 started trading above the 1, right there, and you're in a bullish trade. Take more profit on the 9 or wait for the 13 along the bottom. You have a golden cross. I don't really see anything else here that's useful. Yes, this is overbought. He's looking good. All right, closing that. What do we got next on the dock? Looks like oil. Again, I've switched to the future stickers, so all of the prior notations are going away. So let's look at, oh wait, let's look at some fundamentals, right? I didn't have any fundamentals. Oh, I had a fundamental on gold. So here's one of my fundamentals on gold since we just finished gold. Well, what's the date on this thing? January 2nd is the date on this. So as of January 2nd, gold was up 8 straight days while the dollar was having some weakness. And you can see the notes on the bottom. India's manufacturing sector expands at its fastest pace in 5 years. In December, on sharp increases in output and new orders, India's gold imports surged 67% in 2017 from the previous year to 855 tons as jewelers replenished inventory amid a rebuild in recent demand. Gold is adding to its biggest annual rise in 7 years. Okay, so India is once again bullish on gold. Let's see where this takes us. You still want to go above this peak in order to really, make a difference. Since I'm about to talk about oil, this is really, really crazy to me. Hedge funds are so bullish oil, it looks completely unreasonable. The last time, and it wasn't even that long ago, the last time hedge funds were this leveraged into oil, and look what happened to oil then after. So this is the crazy part. I mean, look at that drop, and then look where we are. Oops. And then look where we are again here and here. That's just absolutely nuts. Just nuts. So even though oil is still looking very bullish, the orange is the price of oil. Oh, this is interesting, right? I mean, it's been 10 years, and the price of oil is pretty much exactly where it was 10 years ago. So much for inflation, and so much for, the world is running out of oil garbage. But anyway, so this is an interesting chart of what hedge funds are doing. So let's, well, what else do I have on the docket here? This is manufacturing. Nope, that's not it. Okay, so this is the daily oil. I didn't want to look at daily oil. This is weekly oil. Do I even have a monthly chart of oil? No, let's make a monthly chart of oil. Save as oil monthly. Let's do this. Let's make a monthly chart of oil. So I need this to go monthly. Here's the monthly chart of oil. Again, I'm using the oil tickers. Let's take a look. If this indicator was useful historically on a monthly chart, And again, I'm not surprised. I didn't even know, but what a surprise that the all-time high in the price of oil happened on a monthly 9. But again, this is me being different than Wall Street. Wall Street did not have this. I did, because Wall Street needed a price flip and they didn't get it. So Wall Street doesn't go for 2 consecutive 9s. I think this indicator could be better. I think mine is better, but I will be putting together the official version just so I can be in line with what Wall Street's looking at. I got to take this more seriously. I mean, this was all fun and games when I started looking at this, but I mean, it's really useful. And then again, there was a 9 here, not as helpful, but then look, boom, 9 to a 13 to a 9. Absolutely beautiful monthly 9 that led to a serious correction from about 115 bucks all the way down to 80. I mean, that's definitely timeable. And this was the monthly chart. Again, I gave you a 9 here, short correction, then down, gave you another 9. And I would love to see this get to a 13 before fully rebounding. But this is a monthly look. And there you go. So that's pretty cool, actually. I'm going to save this monthly chart. And the monthly chart did go bullish here. Went bullish off of this 9. Could have been timed right off the 9. I mean, this 8 is just a beautiful reversal candle. You could have jumped the gun and went in early. If you didn't, you could have jumped in on the 9 candle. If you didn't, you could have jumped in on the 1. If you didn't, you could have jumped in on the 2. With your stop loss being the swing low, raising the stop loss. Even if you got stopped out, your next entry was here. Again, if you got stopped out, your next entry is here. But there was definitely money to be made. We are above the setup trend line in making this 9, which is very, very important. We never went below these risk lines, which is also important. Let's see what happens when we hit another monthly 9 on the bull side. Looking forward to that. Okay. All right. Let's save this. Let's close the monthly chart. Here's the weekly chart. I'm gonna go back to the all-time high. I'm just curious if this indicator would have helped you. Let's drop the back test only because it's. I really hope the music isn't too loud, but that's okay. Let's see if the weekly would have helped us. Yeah, it could have been better. It could have been better. Would have been nice to have this 9 on this reversal candle, but hey, can't get them all. Did it do it anything on the bottom? Well, it gave you a 13, timing the low off of this move. This 13 is coming from this 9 here. The bullish 9 would have taken out the 13 coming from here. Let's move along. This weekly 9 could have been nicely timed. Some traders just wait for the 9s. Like, you don't trade. You trade this 9, and then you wait. And then you trade this 9, and then you wait. And then you trade this 9 to the upside. You trade this 9 to the downside. You trade this 9 to the downside. This 9 to the upside. And this 9 to the upside, but you got stopped out. Beautiful 13 timed. You got a bunch of stuff clustering here. Wow. Let's look at the current situation. Enough history. Current situation is bullish. Current situation is bullish. We hit a price flip right here. We just kicked off a brand new 9. Your bullish entry was right at the bottom of this 2 candle at around $60. And let's see how high we can go. But again, I already closed my chart of hedge funds being ultra long on oil. So, so I have to say. Let's go to the daily. The daily is on a caution flag. We had a 9. Yeah, not much here. Not really much on the daily. I don't want to waste time. Let's move on. Let's look at the euro. This is the euro on a daily. This is the euro on a weekly. I'm not going to bother with the monthly. I think I still got a bunch of charts here. I'm even going to talk about some stocks. I almost never talk about stocks, guys. This is what I was expecting. Haven't done these videos in a while. What can I say? Euro is bullish. The euro is bullish. I mean, not much I can say. Not much I can say. Let's. It's kind of, you know what? It's not bullish. It's like in a range. Let's wait for a breakout. I'd wait for one more high, but I don't like the euro. It's not much there. Here's the daily. Again, it's just flat. You know what? Let's not bother. I don't talk about the Japanese yen very often, but the only reason I am is because we hit a 13, and Wall Street cares about these 13s, right? So, so this 13, this 913, like the 13 is coming from this 9. We hit a 13. It was clean, and your bullish entry into the yen would have taken place. Here's your price flip. A higher high puts you in the trade, and you are long. Where's your stop loss? Well, the swing low, and if you go up one more high, then you raise it to a break-even stop. So as of right now, the Japanese, I'm sorry, the US dollar versus the yen has gone bullish. Let me be clear here. So the yen is losing value versus the US dollar. Okay. All right, save that on a daily chart. I'll glance at the weekly. And the weekly gave you a nice sell-off. So it's a daily trade. Be careful with the weekly. Let's go back to daily. Oh, man. I'm tired, guys. I'm not drinking today, though. Taking a break. It's a rough weekend. Let's close that. Here's the US dollar. Haven't looked at this in a while either. Look at this monster divergence. I'm sure I would have pointed this out long ago. I don't know what I said about it, but this is the weekly US dollar. Looks like we're about to get a depth cross, which would be pretty bad. But the dollar is up against the yen, so that's nice. Let's see. Let's throw the indicator on this. See what we get. See if it's useful. All right, let me adjust. It's been a while since I looked at this chart. So this is the weekly. And the 9 sell came off a little bit early. The 9 buy came a little bit early. You know what? Maybe I'm not. I hope I'm using the right. Yeah. So, all right. So here's my minor. I'll show you my minor problem in a second. I'm using DXY for my dollar index, and I'll show you my minor problem right now. So you can see that this is the weekly, right? So it's on a 913. Let's see if we get the 13. Here's the daily, and here's the daily. Yeah, this is what sucks, right? So I'm using DXY as my dollar index, but Wall Street really likes to use. Probably shouldn't have been showing you guys this. Watch, I'm gonna get banned from some proprietary lists, but I have no choice because I don't have access to the BBDY ticker. I have access to the DXY ticker through TradingView, but TradingView doesn't seem to have BBDY ticker, which is the Bloomberg dollar spot and not the traditional dollar spot. And this is what Wall Street was using. And you can see how over here it's pointed out that Wall Street was pretty bullish on the dollar, and this 13 led to this insane sell-off. They're not even showing you the 9s. The green arrows are the 9s. They're just not being displayed. And the red arrows are the 9s as well. And then the 13s are displayed. And the 13s have been calling short-term bottoms. And this 13 called a nice fat one. This 13 called a nice fat one. And as of January 5th, the Bloomberg dollar spot index, which is calculated differently than the traditional dollar spot index, is on a 13. So this 13 could bounce the dollar, but like I said, that's different than the DXY data. So I don't know. Just information for you guys to keep in mind. All right. All right. Let's close the dollar. All right. So well, one more thing. I was just too lazy to pull them up. Hold on a second. You know what? I think I have one of them. Let me see if I have Italy. Do I have Italy? What's the figure? FTSE, MIB. Yeah, I have Italy. So this is the Italian index on the daily. Oh, that's. Am I not using the right ticker? What's going on here? Hold on. Maybe my time is off. Maybe I need to. Maybe these candles are off. And again, I can't actually show you what I'm looking at. Look at this. The Italian stock market had a 913 on the same day, leading to the sell-off. It bottomed on the 9, but I'm comparing it to what Bloomberg has, and on Bloomberg, this 9 actually led to a 13. So I'm not sure if I mean, mine is pretty accurate. Well, yeah, so, yeah, you know what? My index is slightly different than what I see on Bloomberg. Hold on. Is there another FTSE MIB that I'm not using correctly? It's got to be the only one. The only thing I can think of is the only thing I can think of here is that my time is off because Bloomberg seems to have their 9 here, not here, and maybe my candles are off because I'm using US time instead of the time of the indicator itself, and that could completely skew these numbers. I need to look into it. It would really suck if you have to adjust your time based on the country of the index. That would just kind of suck because I don't think I can set a time per chart. It's universal time across the platform. But Wall Street had a 13 here. I got to figure out why I didn't, and I think it has to do with time, not with the code. The code's accurate. And there was a price flip, so I'm perfectly in line. And the thing, what I wanted to say was, yeah, I'm going to make a new one. Save as, I'm going to say Europe equity. And this is just daily. And because like the IBEX, oh, that's the CFD. Shoot. Yeah, I don't want the CFD. I want the actual freaking index. Man. Yeah, I think this should be the IBEX 35, I hope. Yeah, so same problem. I think I'm off by a time zone. Wall Street had a 13. I gotta look into that. They all did. All of Europe had it. CAC had it. Am I using the right one? See, that's the other problem, right? Index, end of day. Nah, I want the real thing. Anyway, I think this is it. Again, there was a 9 that led to a 13. Yeah, I got to look into this. This 9 on Bloomberg Terminal led to a 13 here. I need to look into why mine didn't. Again, I have a feeling it's my time zone that alters these candles. So not much I can do about that, unfortunately. I don't. Maybe just have to pay for a Bloomberg Terminal, and then I can show you guys these in a much better way. Um, and here's the DAX. Again, on the DAX, this 9 actually led to a 13 the day before the low. I'm cross-checking right now, actually. Yeah, led to a 13 actually over here. So again, I have to take a look at why mine didn't. So all these 9s across all the European equities led to 13s, and we're rallying since then. All right. So this will be like my Europe equity one. I can't someone just say. All right, let's talk about a couple of single name stocks. And I don't even know if I'm legally allowed to provide this kind of information. So none of this is trading advice. I'm just going to point out that this indicator does work on stocks. Like here's one example. And I'm going to try to throw at least one example per week. And I tend to be doing this video on the weekends. So that's kind of what we stuck with on the weekends. So here is Interxon, ticker is XON. I believe they provide like a flu vaccine or something for like malaria. I don't know, something like that. I have no idea. I don't really care. All I care is we had a 9 that led to a 13, that led to a 9, and there was actually another 13 here when the scandal started. Okay, so multiple 9, 13, 9s, closing out with 13s, and boom, pops right off the 13 and this 9. This stock has been grossly oversold, and lots of research done on this is saying that this is grossly oversold, right? So use that with a grain of salt. Not giving you any stock advice. Well, the RSI is just, the MACD is just way out there. So there you go. So let's see what happens next earnings, right? I mean, earnings has been pretty bad to this stock. Well, that one was good, but I mean, it's gone down a lot, right? It went from like $30, and it was trading down at 11, and coming off a 913 pops. It is running into resistance, so something for you to think about for those of you that are traders. Another one, AGN. I have no idea what the hell they do. But again, coming off another 13, again, a stock, I don't know why I zoomed out, a stock that has been completely beaten up. This was, holy shit. Sorry, I gotta say goodbye to some guys. For some reason, I thought it was 1,770. So this stock was 250 bucks. Has completely fallen for a while. It's now sitting. It just hit another 13. That's a 50% correction in the stock. It's going up above its moving average. Again, something to consider for a swing trade. So do your due diligence and trade accordingly. Let's close that. And finally, our new darling is Snapchat. And here's Snapchat. Snapchat had a bit of a tumble at the end of the year, and this was much better looking when I looked at it a few days ago in the middle of the week when I was setting it up. Oh wow, what a nice 9! But at this point, be careful. Right now, it's a 50-50. At this point, I am going to lean bearish on Snapchat, and let's see if it gives you a 13 for a nice clean buy entry. Okay. I mean, Snapchat has been good with this indicator. Here's a 9 that led immediately to a top. Let's throw the back test on, and didn't quite get us a 9 up here, not even close. But this 9 was nice. Let's drop the back test. And that's pretty much it, actually, on Snapchat. It just hits a 9 and pay attention. It looks like a 1 to 4 candle correction. It was 1. And now it looks like it wants to go down. Once it gets back below the moving average, let's see what happens. All right. That's pretty much it for me, guys. Probably a little long-winded, longer than I expected. This was a look at traditional markets. Let me see if there's any questions. Corey's helping me out with questions. I got no questions. Yeah, I've been reiterating it's the traditional markets show. I guess that's it. I have no idea how long this has been on. I'm guessing about an hour. I want to do more. I want to get consistent with these traditional market videos. Once again, I'm still in Medellin, Colombia. My seminar in Singapore is officially sold out. I mean, maybe I'll sneak one more person in. So if you're gonna reach out fast. The LA seminar has about 15 people interested. I haven't posted a payment address yet, but I will. So I'm assuming I'm gonna sell this thing out in a week. So you better get on that. If you miss LA, come to Washington or come to New York City in the following weeks. Okay, I know it's gonna be a little bit cold, but I don't know when I'll be back in New York City or Washington or anywhere, basically. As always, please learn trading. Learn how to trade. This is an educational YouTube channel, not follow the leader. You learn how to trade. You can do it for free. You can use my website. If you need help, come to my seminar to teach you how to trade. And there's always a tone-based consulting. Just click on this button right here. And oh yeah, I'm gonna show my affiliate codes, guys. Why not? I'm sure most of you are already ending the video. But for those of you that are still around and may want to ask a question or two, hopefully Corey is still with me to help me do those questions. I don't even know where my affiliate codes are. I save way too many screenshots that make it difficult for even myself. There it is. Hey guys, since the Bitcoin mempool is still kind of full, feel free to support with affiliate codes. With my BitMess affiliate code, will save you 10%. Cryptomatic will save you 5%. Crypto HW Wallet will save you some. And Crypto HW Wallet is going to be one of my sponsors for the LA conference. Not conference, for the LA seminar. So you guys might get a little gift, for attending my seminar. They are a sponsor along with Buy the Dip. Buy the Dip is also going to be a sponsor. I'm going to try and get a really good little gift bag for you guys because I know my seminars are not cheap. So I'm going to try to give something back here to the community. So thank you, and I'll see what other sponsors I can use. I'm only going to allow people to sponsor that I like. I don't know, I should talk to BitMax. Maybe they'll want to sponsor one of my trading seminars. I should give Arthur a call. But anyway, am I on screen share or am I on camera? I'm on screen share, perfect. That's pretty much it for me. I'll glance one more look. Corey, any questions? Where are we at? No questions. I'm 1 hour in. That is absolutely perfect. I'm keeping these to under an hour. Thank you very much, guys. Thank you for tuning in. I think I'm going to turn off the computer. I mean, look, it's Sunday, it's Saturday. I don't even know who won the football games. NFL playoffs have started. But hey, I just want to try to keep bringing you content. See a bunch of you. I am off. I'll be in New York for a couple of days, and then I fly to Singapore. I'll see some of you at my seminar. And thank you very much for tuning in, and catch you all on the next episode of, wait, what the hell am I doing? Market Pulse. Bye, guys.